Three rate cuts this year have clearly lit a fire under our property markets. Affordability is improved, confidence is back, and the spring selling season is really heating up. And it's not just for houses that are making gains. Unit prices have now risen for 8 straight months as well. Brisbane and Adelaide leading the charge, and Melbourne is quietly staging a comeback. So welcome to today's episode of the Michael Yardney podcast, where I'm joined by Dr. Andrew Wilson, and we're going to dig into his latest market statistics. We're going to help you get some clarity about the many mixed messages in today's housing market as we discuss what's driving our housing markets. And will this continue now that the Reserve Bank is likely to put rate cuts on hold for a while? Lots to discuss, so let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
House prices just keep rising 7 months in a row now. In September, the national median house price hit over $1.23 million, according to the latest figures from Dr. Andrew Wilson's My Housing Market. But what's driving this growth, and will it last if the Reserve Bank puts further interest rate cuts on hold? As always, I'm joined by Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, to unpack the latest figures and what they mean for you as a homeowner and a property investor. Hi, Andrew.
Yes, good day, Michael. And as you suggested, house prices, not surprisingly, continue to rise. In fact, the rate of growth is now accelerating. We shouldn't be surprised, as I said, that another interest rate cut in August, of course, just continues to add momentum to what already is a, shall we say, a frothy environment for buyers and sellers in most capital city markets. So up by 1.1%. over the September quarter. That's the national weighted average capital city house price. That's compared to the results over the August quarter.
If I may interrupt for a second, Andrew, for many new viewers and listeners, just want to explain that when you're talking about quarters, My Housing Market uses very statistically smart ways of measuring house prices. So it's not the price over a quarter. You actually have to, if you want to see what's going to happen over the year, multiply that by 12. It's taking 3 months results over the previous 3 months results, just so people don't get confused when we use the term quarter.
Yeah, look, what it does is it allows us to take a statistically reliable number of observations, that is 3 months worth of property sales, but rather than looking back 3 months, so, you're sort of not capturing real-time activity in a sense, we compare it to the previous quarter, the previous monthly quarter, which of course was the 3 months to August. So you call it a monthly rolling quarterly model, and it does produce the underlying trends to reveal.
Right. So I interrupted you by saying, boy, it was 1.1% over the September quarter, which again, if we multiply that out by 12, would mean that our housing markets have double-digit growth if that was to persist.
Well, that's right, but it still is it is still a double-digit result, Michael. You're correct. Do multiply that by 12, and it is accelerating compared to what we had over the August quarter. So, and as I said, we shouldn't be surprised. We had an interest rate cut in August, adding to those interest rate cuts in February and May. Of course, we're at the beginning of the spring selling season as well, Michael. We always see more buyers and sellers coming into the market. The spring selling season is all about the focus on the end of year results that buyers and sellers look to engage the market as a result of. So, and we've seen that, with our auction listing numbers rising strongly over the past month. And, the fact that clearance rates are still strong reflects the fact that it's not just a market that is both a buyer and a seller's market, particularly a seller's market with so much competition for property. And when we look at the annual results, which tends to take away a bit of the seasonality issues that we still get month to month, Michael, we can see that the annual results are also accelerating. National weighted average house prices are now up by 7% over the past year, 7.1%, and that continues to rise. And that is now higher than the annual results we had over 2023 and 2024. And I would expect that to continue to rise. Although when we discuss the drivers later, not so sure we have the same prospect of an interest rate cut again through the remainder of the year. But, things can change and data is to come through. But when we look at the local results over the September quarter versus the August quarter, Michael, it's interesting that we could almost call the Darwin housing market a booming market. It was again performer, up by 3.6% over the quarter compared to the previous monthly quarter. And that's a reviving market because Darwin certainly has been in the doldrums for a few years. But the Brisbane market, certainly we can't accuse of being in the doldrums any time in recent memory. It was, again, of the major capital cities, the best performer, up by 2.1%. That's house price growth over that monthly quarter. Sydney then was up by 1.4%. Canberra and Adelaide up 1.2%. Perth up 0.8%. Melbourne up 0.3%. Hobart being the underperformer, the only capital city market, Michael, to record declining growth, again down by 0.5%. So Hobart tends to be the constant non-conformer in terms of what's happening in housing markets. We can see Hobart prices rising in Hobart when others are falling, and now we're seeing the reverse with Hobart prices falling as others are consistently rising. And some good, strong results over the past year for homeowners in Darwin, Brisbane and Perth, Michael. Darwin up, as I said, a booming market currently in Darwin, up 16.5% over the past 12 months. Brisbane up 11.8% and Perth up 9.9%. So I think the prospects, particularly for Brisbane, are for another double-figure price result for that market, which just keeps on keeping on. And there's some consistency then over recent years. So
Brisbane's done 30% according to your statistics over the last 2 years. That's a great performance.
So, yeah, it's again, strong results, Michael. And we also had strong results again in the unit market. The unit, the median price for units is the weighted average national median unit price over the September quarter compared to the August quarter was up by 0.7%, not quite as strong as houses, and it's still 5.5% higher than the September quarter last year. And that's the 8th consecutive month of higher unit prices as well. And hey, Brisbane was again the top performer to houses of the major capitals, up by 2.3%, the Brisbane market. Adelaide again higher, up by 2.1%. Melbourne units are certainly on the rise, after a period of subdued activity, up by 1.1%. Perth up 1%, Canberra up 0.6%, Sydney up just 0.2%, and Darwin up by 0.1%. Again, Hobart was the outlier, Michael, with unit prices falling by 0.2% over the month. When we look at the annual results, certainly Brisbane, Perth and Adelaide, and again, particularly Brisbane, are recording very strong annual unit price growth. Brisbane up 15.8%, Michael, over the past year so far. Perth up over the past year, that's the 12 months to September versus the 12 months to September. And Perth up 13.9%, Adelaide up 12.3%. But when we look at the 2-year performance, just to show the consistency of these markets, the top performing unit markets, Michael, Brisbane up by 44.5%. So that's nearly a 50% gain over the past year for unit prices in Brisbane. Adelaide up 36% and Perth up 44%.
Over a 2-year period, yeah.
Over a 2-year period. And look, Adelaide and Perth are smaller unit markets, but Brisbane certainly is a substantial unit market by comparison. So it's not just volatility in terms of the prices mix of units coming into the market that's driving this. It's a generalised, strengthening of the Brisbane unit market, Michael. 44.5% over the past 2 years. And, there's really plenty of momentum in our housing markets at the moment, Michael. We have a strong economy, perhaps just some very, very early signs that labour market cycle is starting to ease. but we certainly wouldn't call it at this stage. We need some more data to come through. The headline results are very strong, still with a low unemployment rate and a high participation rate. Retail sales are still strong. Of course, buyers and sellers are out in force in housing markets. And look, this is all added to what's a bit more of a problematic environment for the Reserve Bank, which will meet this week for its interest rate decision, which will most likely be an on-hold decision. But we await the Melbourne Cup, the next decision, which will be on Melbourne Cup Day, early November. But there was some sobering news on inflation for those that have been looking for a consistent falling of inflation. And we shouldn't be surprised at this, Michael. And we have discussed what happens when the government subsidy ends in terms of the local electricity bill. And we're seeing the results of that. We had a very big spike in electricity prices, and that sort of follows over August what happened over July. And that's because we don't have the full subsidy that was announced last year for electricity prices. We have a 6-month subsidy still in force, but it is half that of what it was last year. And we are, of course, seeing now a rise in electricity as a result of that, because the actual underlying price of electricity continues to rise. So when we don't have the benefit of the subsidy, we start to feel the effects. And of course, what we're doing with the inflation rate is comparing it to where it was a year ago as to where it is now. So that's likely to continue going forward. And it didn't have an impact on the underlying rate because it was excluded, because it was part of the volatile elements of the underlying measure as it's conducted. So what I'm saying is, even though we've got strong momentum in our housing markets, the underlying forces remain the same: lower interest rates, a strong economy, and an undersupplied housing market, and confidence. And also, with this, momentum we have in prices and buyer and seller activity, we're now going to start to see that fear of missing out, that FOMO type of element, where buyers will start to bring forward demand because they're fearful of having to pay more. And we have a government policy that will introduce tens of thousands of first home buyers into the market as well. So I don't think there's going to be any easing in what is currently strong prices growth generally in our housing markets. And the interest rates are really low enough, as I said, to continue to generate that fear of missing out energy that is always a product of a boom or quasi-booming housing market.
So it really seems that mix that has led our markets to rise for 7 or 8 months now is going to continue at least for the rest of the year. That's good news for those who own properties. It means those who are looking to get into the market are going to have to get off the fence and take advantage of. There's still a window of opportunity. It's not too late. Timing isn't as important as choosing the right asset, whether it's your home to live in the long term or an investment to keep over the long term. The property pessimists have gone to bed to sleep. Winter's over, but they're still hibernating, Andrew.
Yes, well, that's the real cycle, isn't it? But look, in terms of the view from prospective buyers in the marketplace, Michael, look, I think there's the one certainty is that prices will continue to rise. We are in the spring selling season now. So if you're not engaged in the market, the one certainty is that prices will be higher going forward. And we would expect to see particularly the middle and higher price brackets rising as those markets, those sub-markets, particularly the Melbourne market, which is performing very well on this year so far in terms of prices growth, better than it has for the last couple of years for sure. And that will be added to by perhaps the prospect of a revival in the prestige market in Melbourne going forward. And we've got some early signs of that. And the spring selling season is always a positive time for that Melbourne market, particularly the higher price sections. That would just be the icing on the cake for what has been a very positive year this year for the Melbourne market with higher prices.
Well, I know you weekly report the auction clearance results, which are giving us a good in-time indicator of what's going on. Some of these figures are looking back a month now, but we see that every weekend more and more people are going to auctions. Yes. More buyers are missing out every time something sells. There's 3 or 4 people missing. FOMO keeps building. So strong momentum for the rest of the year. Thanks for giving us your monthly update, Andrew.
Thanks, Michael.
Each week I have fun giving away 3 copies of one of my books, hard copies, real copies of one of my books, to people who enter our property trivia quiz. Hey, if you've entered before, don't worry, you can enter it again because everyone gets an updated new report. I've just updated the report on what's ahead for property in 2026. So I'm going to ask you a question. Go to propertytrivia.com.au, and don't worry if you're listening to a slightly older episode, your entry will still count. This week's question, pretty simple. I want to give away the books. What's the common name term given to the increase in property's value over time? Go to propertytrivia.com.au, leave us your answer. You'll get a report, and 3 people each week get a hard copy of one of my books. At the moment, I'm giving away Michael Yardney's Guide to Investing. It's a great book. Well, as you heard in my chat with Dr. Andrew Wilson, our housing markets are set to perform strongly for quite some time yet. It's not often that all the property commentators agree on something, but currently they do all seem to agree that for the next year or two, it's going to be a great time as property values continue to rise. Our property markets are going to perform strongly. It's not too late. Yes, the best time to invest, the old Chinese saying was 20 years ago, the second best time is today. So I suggest you don't look for hotspots or the latest fad, but I suggest that you look to invest in areas where the fundamentals are going to be strong for the next couple of years moving forward. I'd also like to make a prediction. Many of those who buy an investment property in the next year or so are going to sell up in, probably with less than 5 years' time. In fact, probably 50% of purchases if history repeats itself, and some of those who stay in the game are going to have underperforming properties. I guess that's what the past has shown as well. So how do you beat those odds? Make the right decisions by getting the right advice. Successful property investors that understand getting independent strategic advice is actually an investment to them, not a cost. And that's where our team at Metropole can help you. Go to metropole.com.au, leave a link in the show notes, whether you're buying a home or an investment property, and have a complimentary wealth discovery chat with one of our wealth strategists. Let's help you explore your options. We've got no properties for sale, and we're much more than just another buyer's agent. We're big enough to tip the scales in your favour, but still small enough to care. So go to metropole.com.au and chat with one of our wealth strategists and learn how we can help you outperform the market, as we've been helping clients for over 25 years.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to share with you a lesson I was taught by our CEO at Metropole, Mark Creedon, who also is host of the Mastermind for Business podcast and a business coach to a lot of smart entrepreneurs. And he taught me that bison in the wild, bison do something remarkable. They run into a storm. When a storm's coming, they don't run away from it. They run into it. Now, that seemed counterintuitive. Well, at first, why move towards the danger, the discomfort, the struggle? But apparently charging into the storm, the bison pass through it faster and come out the other side sooner. On the other hand, avoidance only stretches the suffering. The storm chases you and controls you. And Mark's message to us as a team at Metropole was life works the same way. The things we put off, the tough conversations, the decisions we avoid, the challenges we sidestep are the very thing that hold us back. The life you seek is always found on the other side of the storm. And property investing is no different. Right now, many investors are paralyzed by headlines about interest rates, inflation, and affordability. They're waiting for the perfect conditions, and they never arise. But here's the truth. The storm never goes away if you keep running from it. You just prolong the uncertainty and allow fear to dictate your future. The investors who achieve long-term wealth are the ones who face the storm head on. They take the time to educate themselves, surround themselves with the right advice, make strategic moves while others are sitting on the sidelines. These smart strategic investors understand the challenges, whether it's tighter lending, short-term cash flow pain, or market volatility. They're the cost of entry to building a resilient, wealth-producing portfolio. So the message I want to share with you today is happiness doesn't come from ease. It comes from overcoming, from resilience, from the pride of paying the cost of entry, whether it's the 100 hours of focused work, 100 careful savings decisions, 100 nights of delayed gratification to build your deposit. So ask yourself, What storm are you running from that you should be running towards? Because every breakthrough, every transformation, every next level of your life and your wealth is hiding inside the very storm you're avoiding. So run into it. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Well, just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?